All righty. Sam, welcome. I'm so glad you're here.
I am too, Cynthia. Thank you so much for hosting this and putting this together.
Oh my
Gives me an
gosh.
opportunity to help. I love it. Thank you.
Oh my gosh. Well, hi everyone. It's actually exactly 4 o'clock. So I want to welcome you. Today is Thursday. It's 4 o'clock, right before the holiday weekend. So thank you so much for joining us today. I'm actually here. I'm Cynthia Cohn, by the way, if I haven't met you before. And I'm here in my living room with a special guest coming back for a second Fireside Chat. As many of you know, I own a boutique residential real estate brokerage right here in Pasadena. And I'm very proud to lead and own one of the very few women-owned residential real estate brokerages in the state of California. And one of my absolute favorite parts of owning my business is really bringing people together and really serving as a trusted resource to my network. A couple weeks ago, I hosted a question and answer video with State Farm's Sam Lamb with just a few questions that I had about the current insurance landscape in California, particularly. Sam is a friend of mine too, and he is a tremendous resource for my clients and I over the years, and is a great resource with the recent changes within State Farm and the industry. We had such great feedback, honestly, from the past video that I thought I would open it up to the floor to my network so we can really educate ourselves together about the impacts and the opportunities within the insurance industry in California. So today joining us, I have lots of my friends from all different walks of life, all different trusted advisors, past clients, potential buyers, potential sellers, and even some realtors. I also wanted really, before we got started, to remind everybody that we will be recording this Fireside Chat today and sending it to you. So you are able to revisit this video and rewatch it for any specific details that you're interested in. Now, I have put together several questions for Sam, and I thought we would go through those, and then we can probably at the end open the floor up and have Sam answer any questions that you might have. And of course, if there's anything particular for your own home or anything private that you want to discuss with him, I will make sure that you have his information, and he will welcome you reaching out to him, and he will answer your personal questions. But before we jump in, I would love for Sam to share a little bit about himself.
Oh, Cynthia, thank you so very much. Hi, everyone. Thank you so much for taking the time out to join us today, especially before the long holiday weekend starts. My name is Sam Lamb. I am a 5th generation of my family in the Pasadena area. I'm also the 3rd generation in our State Farm family. It all started with my wife's grandfather, and her father is an agent, and then my uncle-in-law is an agent, and I'm an agent. My wife, Nicole, she works in the office with me. She's my better half, my rock support, and just so blessed to be able to work with her. Also have 3 wonderful team members that have been with me from the very beginning. And so we specialize in a lot of personal lines insurance and also business lines insurance. So we're experts in homeowners insurance and your auto insurance and your umbrella, your earthquake, your personal articles policy, your life insurance, your disability insurance. And then we also specialize with those small business owners for their business liabilities, their employment practices, their professional liability, their business or commercial auto and fleet policies, you name it. We also specialize in some specialty products as well. But I really hope that I have a chance to meet you guys and on a personal level. And I really welcome any questions. Like, please put me to the test, challenge me. This is how I get better. I love this open forum. Cynthia, again, thank you so much for this opportunity. I really hope that I can be a resource for everyone.
Oh gosh, Sam, thank you so much. And I really wanted to have this forum too, so we can really discuss, obviously where the opportunities are. This is not to alarm people, but it's just so we understand what's going on and we understand what the opportunities, and for obviously any of the buyers or sellers or agents out there, really how we can just protect ourselves, moving forward. And there's still lots of options, lots of opportunities, and that's why I have Sam here so he can discuss those. I like to be
Definitely.
optimistic all the time. And so, Sam, that brings me really to my first question. Could you just give us a brief summary of the current insurance landscape that homeowners today, for homeowners today, and how we actually got here?
Sure. Got it. So what I would describe the current landscape is that it's a little tight. Okay. And what that means is the availability of insurance carriers has narrowed. Especially in the last couple of years. And the reason why we've just had some of these insurance carriers leave the market or maybe pause their business or stop writing altogether is really a combination of things. There's many different things that led up to this. And I think it's important that we understand how we got here, and then what does that actually mean now that we're here, okay? And how we actually got here was we have, in the past, around 2017, I'm sure we're all familiar with it, we had some catastrophic wildfires. And there were some insurance companies that might have been caught off guard because of these huge catastrophic wildfires. A lot of people think that, well, there wasn't a lot of homes that were burnt down. Like, why does it affect so many insurance carriers? It's important for everyone to understand that in a lot of these insurance contracts, the policy language clearly reads that if you can't live in your home due to uninhabitable conditions, such as maybe smoke, where it's not healthy for you to live in that home, the insurance company is going to provide coverage for homeowners to live elsewhere while the home is safe to move back into and live on a daily basis. And that overall process can be very, very lengthy and can be very, very expensive. So many of these insurance carriers were basically responsible for moving homeowners out, moving them back in, but before moving them back in, making sure that house, the interior, was scrubbed top to bottom, making sure that it was completely healthy for them to move back into. So that created a tremendous amount of claims that came through. The other thing that really is contributing to today's kind of tight environment is reinsurance costs. And I don't know if everyone is familiar with the reinsurance market, but insurance companies, admitted insurance companies in the state of California have the option, it's not a requirement, have the option of purchasing reinsurance through companies that offer that reinsurance to limit their risk. Now, the wildfires in 2017 were really catastrophic for those reinsurance companies. And those reinsurance companies are now repricing the cost of their reinsurance. And that is starting to take place. It actually has already taken place in the last couple of years. We're really starting to see the effects of it today. It's starting to increase every year from my knowledge. The other important thing about that is insurance companies, from my understanding in California, are not able to pass down the costs of those reinsurance that they purchase to their consumer. So they have to completely take on that additional cost. And that is putting a lot of insurance carriers in a really tough position to stay feasible, because the last thing that we want for insurance carriers is that for them to be in a position where there's a possibility that they could not pay future claims, right? For us paying our premium, we are paying for the promise that if a covered claim occurs, the insurance company is going to have enough in reserves to pay those claims. So these insurance companies, if they're in a position where they are maybe fearful of not being able to pay those future claims, they're going to stop writing business or they'll exit altogether. Now, it's important to understand too that when working with the Department of Insurance, let's say that, for example, insurance companies want to change the policy language. Can we go ahead and just work together and maybe we'll limit the coverage on maybe smoke damage? Maybe we'll limit the coverage on water damage. That is something that has to be approved by the Department of Insurance, and that can take a long time. I'm glad that that's the way that it is. That's why the Department of Insurance is there. It's there to really protect the consumer, and these insurance companies have to perform at a certain level. Okay, so that Department of Insurance is keeping them honest. So with that being known, if it takes a long time for policy languages to be approved or changed, and then all of a sudden things are continuing to get worse in terms of their financial position, they're going to stop or just exit altogether. Now, those insurance companies, they started to exit in around 2 years ago. And what that did is that put a tremendous amount of pressure on insurance carriers that are still writing in the state today. And what happens is it's very important to understand that insurance carriers, they don't want to be the only insurance carrier writing in the state of California. State of California is a catastrophe prone state. There are a tremendous amount of insurance claims that happen on a daily basis. If there's just a couple insurance carriers that are still open, they're happy to take on the business, but they're also taking on the claims that come with it. And over the last few years, we have seen the severity and the frequency of claims increase. And a lot of that has to do with the inflation that we saw right when we came out of the pandemic. And insurance carriers were not pricing their premiums or their policies correctly, and if they want to increase their rates again, and we're glad that this is there, the Department of Insurance has to approve it. Okay, and that can take a long time. So a lot of insurance carriers were caught between a rock and a hard place because they want to go ahead and they want to provide that insurance. Okay, but the severity of claims were increasing dramatically, and also the frequency. And again, we saw more and more insurance companies finding themselves in a position where there was the risk of not being able to pay future claims. Okay, and that's why the company that I represent, State Farm, completely ceased all new business, because we have to make sure that we have enough in reserves to pay for the exposure that we have in the state. That's our promise to our policyholders. That's the most important thing. So that's kind of how we got there, which I think is really important to understand. But that doesn't mean that things aren't moving, you guys, and we can talk about that more. There are plenty of other opportunities out there. This is just kind of a brief overview of how we got there.
I hate that, but you gotta.
Excuse me.
Yeah, exactly.
Can everybody, excuse me 1 second.
Yeah,
You're just
it's a
going
bad
to
situation.
excuse me. I'm sorry. If everybody can put on mute, that would be great. And at the end, we're going to go ahead and open it up for questions. All right. Thank you for understanding. Want to make sure we get through everything. So Sam, I really appreciate you giving us a little history, and of course where we are now, it makes sense. Question: how does this really impact current homeowners, and really what can we do to protect ourselves?
Sure. Like, that's a great question, because that actually is the biggest question that I receive on a daily basis, especially for all those that I insure. They're wondering, how is this going to impact me? Okay. Well, there is the potential, right, that insurance companies might have to non-renew, especially if they can't get their rates increased. It's important to also understand too that if even if a rate does get approved, it does take a lot of time for the policies to bill, and for all those existing policyholders to be on the new premium. And so that's something that's important to understand. Right now, I'm really glad to say that it's not impacting any current policyholders, but there always is the potential of the non-renewal. There is also the potential of rate increases. Okay, so we have to be prepared for those things possibly happening. Okay, but those are things that are completely out of our control. Okay, if they do happen, yes, it's kind of an inconvenience, but there are options out there. Okay, if for some reason someone receives a non-renewal letter, it is not the end of the world by any means whatsoever. You're just going to work with an insurance professional that can work with many different carriers and find another carrier that is accepting the risk. And there are plenty of them out there. We also have the California Fair Plan that can step in and provide coverage for homes that are in elevated wildfire areas. There are plenty of insurance professionals that can write what we call companion policies or difference in conditions policies that can fill in the gaps of coverage that might be within the California Fair Plan policy. So there are still plenty of opportunities for people to still have insurance. What do I think in the future? There's definitely the possibility of non-renewals. I don't know if that's really going to impact Los Angeles County, but it is a possibility. I think the greater the possibility of what is most likely to happen is increased premiums in the future, so insurance companies can start properly pricing the policies given today's data, right, in terms of properly reflecting the severity and the frequency of claims that we're seeing today. We've got to make sure that we have enough reserves in hand to pay for any future claims. And as a homeowner, that's incredibly important.
Right, right. Well, out of curiosity, how will this impact really future home buyers? I know we have some home buyers on this call and mortgage professionals. And one thing I've been thinking lately are, really what are some of the best practices we can place to make sure that we or agents that we're working with can implement practices that really protect their clients. So can you talk a little bit about that? What can we do to, protect future homeowners?
Yeah, well, I think that you're a great example of doing that for people, because you want to build your network of professionals that can help you, especially during the home buying process, right? Like you have the best realtor that you can find, you have the best mortgage lender that you can find, you try and find the best insurance professional that you can find. And having insurance at the top of your mind now, understanding that you might have to jump through a little bit of some obstacles to get that policy in place, is a best practice. Okay. And so if one of the things that I'm recommending for anyone really that's in the market for buying a new home is just making sure that they're understanding exactly what type of insurance market they're facing with right now, making sure that they have a good relationship with an insurance professional. Okay. If there's a home that someone is interested in, okay, they need to be talking with that insurance professional that can guide them on any possible obstacles that they may face with securing coverage for the home, making sure that that insurance professional is available to them whenever they need to be available, and they can walk the property, they can look at it online to point out any potential problems whatsoever. But if a potential home buyer is close to, or they feel positive about their offer being accepted, need to make sure that we have the insurance professional ready to go to submit all the information that they need to get a quote, right? So we can make sure that, number one, that there's the possibility to secure coverage, and that really shouldn't be a problem. Okay, there's plenty of insurance carriers that are taking on the risk, but also for budgeting purposes too, right? Every home is different in terms of the premium for the insurance policy. Some homes might be more expensive than others because they're in maybe elevated wildfire areas. There's some that might be more expensive based on the square footage of the home. The insurance professional will know all of this, or should know all of this. And then that insurance professional, with their knowledge, should be able to properly guide and just prepare that potential home buyer of what those potential premiums could be, so they can properly budget for those.
Okay. Do you think that there's going to be more insurance company inspections prior to binding a policy?
Yeah,
For a new home buyer?
you brought up a great point that everyone should be aware of. The landscape in the insurance market is changing on a daily basis. There's insurance companies that, in order for them to keep writing business in this state, they just have to pull a couple of levers, and some of those levers might be saying, we would like to inspect the home before we even offer a policy on the home. In the past, a lot of times insurance companies would bind the policy, provide evidence of insurance, and a third party would then inspect the home after escrow closed. Okay. And if there were any changes that needed to be made, any enhancements that needed to be made, the homeowner had plenty of time to do that. Escrow was closed. Now things are a little bit different, right? Like insurance companies are really looking closely at the homes in California, trying to limit as much risk as possible, trying to really properly underwrite the policies. And in order to do that, they're going to look at these homes a little closer. And those things are important to know because they can affect the timeline of escrow. Now, is this going to happen every single time? Absolutely not. I would say maybe 8 out of 10 times it doesn't happen. Okay. But there is the possibility of it happening. And that's why we're here to educate you guys on some of the things that you need to be aware of during this process so you can prepare for it, so it can be as stress-free as possible. And if it does happen, you're prepared for it. You're working with your insurance professional, getting the inspection done as quickly as possible so they can at least quote the home. So that's one of the things that I'm hearing.
Okay, that's great. And I know in our own, for any of you that may be purchasing a home, you will have an investigation period. And in the California Association of Realtors residential purchase agreement, the boilerplate, puts in there, you have 17 days to do your due diligence. And the way the market has been with limited inventory and multiple offers, quite often, buyers would reduce that investigation period sometimes to 1 day, 3 days, 5 days, 7 days, which is very quick. So one of the things Sam is suggesting is if you are thinking about purchasing, right when you find a home you like, go ahead, contact your insurance provider, get a quote. So you're just aware what the quote will be, what will be involved. Because if you're turning around, having to release a contingency quickly, you do want to make sure of what that cost will be and you'll feel comfortable. You just can't assume, that it's insurable for a certain price that's within your budget.
Right.
Sam, that's really great. We're going to definitely make sure we're on that sooner than later for sure.
Yeah. And Cynthia, I just want to piggyback off that really quick guys, it's as simple as just sending the address of the home to the insurance professional or the team member, and they can look at everything online. They can use the software that they have from the insurance company to see if there's any type of red flags that need to be addressed. So it is something that should not take a long time to do. You should be able to get an answer in just a couple hours after you send off that email with the address.
Okay, that's great. One question that came up from one of our clients, they had asked, has this had any impact on renters insurance? We had recently had a transaction where the lessee was unable to secure a $1 million policy, which is actually our typical minimum requirement for our lessors that we represent for the lessees. And so what are your thoughts on that regarding renters insurance and the impact?
From a renter's insurance standpoint, I have not seen as big of an impact as I have for homeowners. It's important to understand when we hear 1 million, that's just like a buzzword that people start to really perk up. But when we're talking about 1 million, we're talking about liability coverage in a renter's policy. That's a very important component of the renter's insurance policy, but also that personal property coverage is also in that renter's insurance policy, and also the loss of use, right? Like if something happens in your apartment and you can't live there, the insurance company needs to pay for the additional living expenses that come about because of that covered loss. Okay, so $1 million, not a big deal. That is definitely standard. No one should have a renter's insurance policy with anything less than $1 million in liability protection, because renter's insurance is an extremely affordable policy that I recommend everyone to have, because it provides so much coverage at such a low premium. Okay, but I am not seeing drastic impacts in the market affecting the people's ability to secure renters insurance policies. There are plenty of carriers out there that are still willing to do that.
All right, terrific. Well, I really wanted to open the floor to our guests today. And right now, we'd love to hear any global questions you might have about the current insurance landscape. And of course, as I mentioned before, if you have any specific questions, we can handle them offline after we wrap up. So if you'd like to go ahead and raise your hand, we'll take a question at a time for Sam. Naomi, I know she has a question. Naomi Farley.
Oh, is she on mute?
No, we can't hear you. No. All right.
Maybe
Anyone
we
else?
can chat.
Yeah. Naomi, can you send me a message?
And we can.
I have a question.
All right, go ahead.
It's Martha.
Hi,
So
Martha.
I have a few, so I'll just start with one. Is the California Fair Plan available, the way you said it, is it available virtually anywhere? So if somebody gets non-renewed and they can't find insurance, or is it just in the areas with the specific fire issues?
Sure. So, yeah, so that's a great question. From my understanding, the California Fair Plan policy is a last resort policy.
Yes.
Okay,
right.
so it's our responsibility to make sure that we're exhausting all markets. And if those markets are unwilling to offer the coverage, that's where the California Fair Plan steps in. So I
Okay,
believe that it is all areas, right?
So if I couldn't get it in my own house, let's just say in San Gabriel, I could go with the California Fair Plan.
Yes, absolutely. That's my understanding. And that's the whole reason behind the California Fair Plan policy. And it is my understanding too, that there are going to be continued enhancements with the California Fair Plan policy. The scope of coverage is going to be expanded to different types of policies. We drastically need help within the apartment associations market, and I believe that they're working on trying to increase the coverage so those associations have a place to go to find fire coverage. Okay, it's just important to understand that there are potential coverage gaps within those California Fair Plan policies. It is not a policy like your standard homeowners policy. Okay, there are things that there are coverages that need to be filled, and that's where I really recommend working with an insurance professional to create a policy to fill in those gaps.
So it kind of what you just said, is it the fact that maybe a lender might have a problem because those gaps exist?
There very well could.
Yeah.
They're very well that every lender is different, right?
Right.
There are some lenders that are looking more closely in these policies because the insurance companies, some of the coverages are changing and the policy language is changing. And I'm starting to get questions from lenders because there's new policy language that are changing, and they want someone to help kind of define what those coverages are. And so, the answer to your question is absolutely.
Well, because I have a client who's, God, they're kind of in a very rural area, and he got canceled. And he says, Martha, my only option is California Fair Plan. And now I'm realizing maybe there's a gap there that forgetting, because he wants to get a reverse mortgage, that it may not work. I mean, I'd have to have that go through our underwriting and make sure.
Yeah, definitely. And that's definitely a best practice. Even getting a quote from the California Fair Plan is something that is very simple. And if we can have that quote ready to send over to those underwriters for them to review it, and if they have any questions, like if there's certain coverages that they have to have on there that's currently not being presented by the California Fair Plan, that's when we're pulling in that insurance professional and creating that difference in conditions policy.
Okay.
Yeah, absolutely.
That's good to know. Yeah.
Yes.
What is the name of that gap policy, Sam?
So each insurance company kind of calls it a different name, right? We call it a companion policy. So it's a policy that it's a companion policy to the California Fair Plan. I've heard the term difference in conditions policy be thrown around as well. And again, it's a separate policy that is strictly there to provide coverage for certain perils that are not listed on the California Fair Plan policy, such as like water damage, such as maybe theft, vandalism, liability, all of those things. So outside of fire and smoke, from my understanding.
Okay. All right. And I know, Nicole, you had a question. Can you offer an example of those language changes?
Yeah, Nicole, that's a great question. I'm not going to throw out the name of the insurance company, but one of the things that I just started seeing is that when I'm looking at these declaration pages and it's saying it, all of a sudden there's a bullet point that says roof coverage is actual cash value. Okay, and what does actual cash value mean? So that is actually a term that is really there designated for personal contents coverage. So if we have our home, if we have the unfortunate where our home burns down and we have our personal contents in there, is the insurance company going to pay what it would cost to replace those personal contents, or are they going to pay you the value plus depreciation? Okay. And that's what they mean by actual cash value. All right. So if I see roof and it's saying the coverage is there for actual cash value, and we have maybe a 35-year-old roof, the insurance company is, from my understanding, is not going to provide coverage for you to go out and pay for the cost of the new roof and the installation. They're going to provide coverage for just what that value of the roof is at 35 years old, and not what it would actually cost to replace the roof today. That is some of the policy language that I am starting to see. Maybe it's been there for a few years, I don't know, and now I'm just seeing it. I mean, that could be, but that was something that really stuck out to me. And that is something that a real estate agent and mortgage lenders are starting to bring to my attention, that they have concerns about that.
Interesting. Okay. The homeowner companies already do that.
Yeah. Yeah.
Okay. Naomi Farley is with us as well, and she just typed in her question. So she said that she wanted to ask Sam, her own agent, who she loves, about delays with the FAIR plan now, and that they're so much busier. We're hearing there will be delays in binding.
Yes.
What are your thoughts about that?
Yeah, it's not surprising, because again, they're one of the last resorts, right? And they're going to be open no matter what. And they might have limited staff to take on that influx of business. These are one of the things, guys, that we just have to be aware of. Okay. And that's why it's so important to try and get ahead of the game. Is if we feel like our offer is going to be accepted, we are calling that insurance professional and trying to get everything quoted, and and to manage our expectations and on how long it's going to take to secure the policy. Okay. I think that's going to continue to happen. It might even continue to expand on the actual how much of a delay there is. But yes, I started hearing that 2 days ago. And so I think that it's real and it's here to stay, but it's manageable. It's definitely manageable. It doesn't mean that it's going to blow up an escrow or anything like that. We just have to have it at the top of our mind and just be prepared for it. That's it.
Yeah, absolutely. I just this week listed a property in an area that I thought was high fire zone. So best practice really for any of the agents, again, that are listening, right when you formally take the listing, you should the next day definitely run that natural hazard zone disclosure report, so you can check what zone the property is in. And at the same time, I forwarded that address to an insurance agent who could look and see and just quote us exactly what that would look like. So I could at least prepare the seller what the cost for the buyer would be, and also had a resource for the buyer as well.
Right. I think what's also important too is if I am a home buyer and my offer is accepted, right, and if that home is potentially in a higher or elevated wildfire area, that the agents are talking together on who is currently insuring that property. And can we get in touch with that current insurance professional that solicited that policy? So then we have a good opportunity to work with a company that already has the risk on the books. Okay, and they're familiar with the home. So I think that's also a best practice that people should have at the top of their mind.
Yeah, I appreciate you bringing that up, and I think that's probably a good first resource.
Yes.
As well, for sure. Thank you for saying that. We also have a friend of mine, Nike, on the line. And I know you had a question. Did you want to ask Sam?
Yes, I had a couple of questions. One was, if you have insurance under the FAIR plan, and the lender doesn't like it for various reasons because of shortfalls, can the lender impose its own insurance and then charge the homeowner? Because we know that if you don't have insurance, the lenders can't obtain the insurance, and then they charge you a very high rate.
Yes. So that would, I'm actually probably not the best person to answer that question. I am familiar with forced insurance, what actually it takes to get to that event. It would be my understanding that if the lender does not have the proper evidence of insurance meeting all of their guidelines, then they are going to go ahead and force insurance on that. And again, that's where working with an insurance professional, finding that difference in conditions policy, so they can meet those underwriting standards for the lender is so critical.
Right.
Because I really don't think that the lender would have a problem with the California Fair Plan offering the policy. Okay, I think that they would have a problem for the gaps that are inside of that California Fair Plan policy. And that's where that insurance professional should be able to assist, that home buyer or that, that current homeowner on being able to meet all of those underwriting guidelines.
Okay, then I have one other question. With what's going on with insurers leaving California and various risks from fire and so forth, should homeowners be taking proactive steps to make their homes more attractive to insurers, like, buying siding that's this concrete siding that's fireproof? Or what do you see in the future happening in that regard?
Naki, that is such a great question. And it's important to understand that every insurance carrier views risk differently. There's an insurance carrier that might look at your home and have a tremendous amount of concern. There's another insurance carrier that can look at your home and will welcome it with open arms and nothing needs to be done. Okay. Now, I'll tell you that in insurance carriers, especially with the advancement of technology today, they're going to have the capability to take a much deeper look into your home. They're going to have the capability to look on the gutters, to really get up close to the roof to see if there's any deterioration anywhere. They're going to be looking at the siding. They're going to be looking at the foundation. They might even have the opportunity to go underneath the house. They might even start requesting full interior inspections too. Now, if I'm a current homeowner or even a future home buyer, okay, the things that I really want to be concerned about when I'm purchasing that home is I want to look at the foundation, if it's on a raised foundation or a slab foundation. If it's on a slab foundation where the home doesn't have a crawl space, I want to know about where that plumbing is. Is the plumbing underneath the slab, or if it's built in the slab whatsoever? That can cause a tremendous amount of plumbing issues, especially with leaks, right? Because if it's built in the slab and you have a leak, then all of a sudden you're not just accessing and fixing the pipe. You're going to probably have to be rerouting that plumbing somewhere. Okay, insurance policies might be more expensive than that. Okay, we also want to be concerned with the age of the electrical. Okay, if homes have any knob and tube wiring, a lot of times that's going to deem them to be ineligible for a homeowner to offer homeowners insurance. So we want to be completely transparent with what our electrical situation is, how big our electrical panels are on the home. Would it be a good idea to make sure that that electrical panel is being upgraded, especially maybe in the future if you ever want to sell your home, because more and more families are buying electric vehicles and they have to have a certain amount of amps to be able to charge those electric vehicles. We want to make sure that that electrical panel is updated not only for a safety reason, but to be able to accommodate maybe future buyers. We're also going to want to make sure we're taking a look at our air conditioning units to see maybe how old they are, how proficient they are. I'll tell you this, it's very important that everyone understand that, where if we have a homeowner, okay, that we're currently insuring, and they go through major renovations where it's a fully updated air conditioning unit, just that unit, fully updated electrical, fully updated plumbing, okay, you have to make sure that the insurance company knows about that, because there should be a tremendous discount available to the homeowner for those new utility ratings, because it's important to understand that the insurance company, part of the premium is going to be based on the age of the home, the age of the utilities. Now, if all of a sudden I update all of my utilities, well, that premium should be lower because now I've lowered that risk because I have all new utilities. So if any homeowner goes through with current with all utilities updates, they have to notify their insurance professional. Any potential homeowners that might be in escrow purchasing a home, definitely want to know what the age is of those utilities, so the insurance company has the proper information when they're building that policy, so you have a better opportunity to have a more accurate risk. Now, what can we do in the future? Where do I see the market going? Okay. It might surprise a lot of people, but as an insurance company, the thing that keeps insurance companies up at night, one of the biggest risks that we take on is water damage. Okay. I'm not talking about floods, right? I am talking about the domestic plumbing running through your house. And I'm also talking about those malfunctioning toilets. Okay. If one of those pipes breaks suddenly, okay, and water is continuous all throughout the house, that can provide a real big problem for insurance companies. If we have multi-story homes and plumbing is built in ceilings, and if a toilet malfunctions and then everyone leaves for the day and goes to work, and that toilet is running and it's seeping down, the path of least resistance, huge claim, huge potential claim. So one of the things that I'm considering doing on my own house is installing one of those water leak detection systems. Those water leak detection systems, you guys, have just been basically advanced by incredible amounts over the years. And these systems, they have the ability where through, I would say like algorithms, where they can determine what your patterns are, your water usage patterns. And if something happens and the water is being used at an odd time, right, or an odd amount of flow that is being used, these systems have the ability to notify you on your phone of a potential leak, okay? And if you don't, silence that notification, it will automatically shut off the water to the house. So I think it would not surprise me at all to see insurance companies in the future mandating that every single home have one of these water leak detection systems installed on the home. They also have devices where you can put it in certain areas of the home that detect moisture. That can also notify you as well. I know that there's a lot of insurance companies that are requiring these leak detection systems for policy owners that have multiple homes. So if there's a secondary home that, or they might have a seasonal home, a lot of insurance companies will not write the policy unless they can show proof that a water leak detection system has been installed and it's currently active and being monitored too.
That makes sense. It really does. How many people, we all talk to people who've had some kind of flooding in their kitchen and just renovated their entire kitchen because they were away a few days and the dishwasher leaked.
Right.
Sam, I had two other questions. I know Nicole King is on. Hi, Nicole. And she had a question for you.
Okay.
Hi, Sam.
Hi,
This
Nicole.
is Nicole King. Hi. First of all, I wanted to ask you, can you share the name of the company that you were using for your water detection system?
Okay, so I have yet to install it, but what I am seeing the majority of policyholders go with is it's called Flow by Moen. Okay. And I think it's a very affordable system, and the installation is very affordable too.
Oh, great.
Okay. And I have a list of plumbers that are very well versed in installing these. If anyone needs any recommendations for local plumbers, I'll be happy to help them with that.
Yes, please. I would be very interested in that.
Okay.
And I also wanted to ask you, so if, for example, I have a fire policy in place that I'm very happy with, I'm going to sell my home, and the buyer is having, say it's a new buyer, this is their first home, and they need a fire policy. Is mine transferable?
It is not transferable.
Okay.
Okay. So it's not portable. So that's important to understand. It is for that new buyer purchasing your home, they are going to have to go through full underwriting, meaning that a new application is going to have to be submitted. And that new application will most likely trigger a lot of different underwriting standards. And one of those underwriting standards might be to have that exterior or interior survey. But it's going to be treated as probably a brand new person to the company and a brand new application.
Okay.
Right. And the other thing too, Nicole, is for everyone to understand that if we're in that position, I'm purchasing your home and I'm looking to get a fire policy, I want to go with the same company, and can they just take all that information on the home and put it on my application? It's important for everyone to understand that the premium is probably going to be different, because you might have some other discounts baked into your homeowner's policy than the person purchasing your home, because there's a lot of insurance companies that are putting greater discounts on for the longevity, the loyalty that you have. Also, guys, while we're on the topic of discounts, it's important that everyone is looking at the opportunity to bundle all of their insurance policies with the same insurance carrier, so they can maximize all the discounts the insurance company has to offer. I also, since we're talking about discounts, alarms, you guys, a lot of insurance companies are going to be requiring alarms. Now, not every alarm is the same. When we're talking about alarms, they have the capability to monitor for both fire, for burglary, and carbon monoxide. So we want those alarms that are tied to a central monitoring station, where if any type of alarm is triggered, they're going to notify that policy owner or that homeowner. And if they can't get in touch with that policy owner to silence that alarm or to give the all clear, they are going to dispatch the authorities to that location. And so I really am recommending all of my homeowners to really consider installing an alarm that is monitoring for both central fire and burglary.
Great. And I'm glad you touched on the bundling. Naomi Farley had a question about that, and that makes a lot of sense. And I know during our call last time, Sam, you had recommended as kind of a next step to, and my light just went out, a next step to go ahead and have your insurance agent actually look at your insurance policy to make sure you're properly insured currently, because of the building costs have gone up, and behoove you to have that looked up to make sure you're protected properly.
Yeah, definitely. I was just on a call with the Department of Insurance, and they brought up a great point of just how many people are underinsured today because their policies haven't kept up with the frequency and severity of the claims. The claims that are occurring today are much more expensive than if they occurred 2 to 3 years ago. That's why these policies should be reviewed on an annual basis for everyone. Now, Cynthia, can I just bring up one thing too that I think it's important for potential home buyers and home sellers too, because we've run into this situation before. If we have a home buyer that it has their offer accepted and they're working with an insurance carrier, and that insurance carrier has the ability to pull up the loss history report on that particular location, and that loss history report might produce results that show that there was an insurance claim filed at that location. Okay, it's very common, and it's really no big deal. But if that does happen, okay, it's really important that everyone works with their insurance professional so that they can request the right documentation, just showing how that loss was rectified. I guess if there was a leak in the kitchen, can we see the documents that show that the leak was, the water was completely taken care of properly, with a water remediation company? If the floor needed to be rebuilt, how was it rebuilt? What were the materials used? All of those things. What type of information did the insurance company use to create their estimate? All of those things. So again, it's pretty common, and if it does happen, no sweat. You can work with your insurance professional, and that insurance professional can also come up with a list of questions to give that current owner so that they can produce the answers to those questions.
All right, thank you. And Naomi, you had a question, your hand's up. Or maybe we asked that question you had.
Was it in chat?
It was in the chat. I mean, she had asked about the bundling, just looking to see. All right, well, does anyone have any further questions at all? Just raise your hand. Well, listen, firstly, Sam, thank you so much. I really appreciate you taking the time to be here and answer questions. It's always such a pleasure to see you. And to everyone on the call today, if this conversation interests you any further in any other way, please do not hesitate to really reach out to me via email or phone. You can reach me at 626-714-6808 and at Cynthia@cynthiacohn.com. Again, I'm the owner and broker, Cynthia Cohn and Associates. And really to us, there's nothing more important than you, your dreams, and your goals. And our mission is really simple: to provide you and your family unmatched value by delivering world-class protection, heartfelt care, and guaranteed results. We all deserve that, don't we? When you need and deserve it most, we're here for you. If you're interested in selling or buying a home, or you have questions and need a resource, please do not hesitate to reach out to me. And I really want to be a resource to all of you. I will be sending out a follow-up email with more information, including Sam's information. So I know, Sam, you're more than happy to answer any questions the group has, correct?
Yeah, absolutely. My pleasure.
And if you want to jot down Sam's information, what is the best way to reach you, Sam?
So I'm always available at our office. Our direct line here is 626-500-1300. Once again, it's 626-500-1300. My email address is sam@samlaminsurance.com. You can also find us at www.samlaminsurance.com. Please feel free. You guys are always welcome to give us a call, and we just really enjoy being a resource for you all.
Wonderful. Thank you so much, Sam. And thank you again, everyone, for joining us today. I wish you all a lovely 4th of July weekend, and we'll talk to you soon. Thank you.
Thank you, guys.
Thank you.